Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A second bullish white soldier yesterday and a follow-on to the previous session's bullish long white Mariposa. The market tested up to the next resistance above, the unsurprising December 2002 low at 98.55, breaching it, as well as the coincident lower time currently at also 98.55, and that's of the big old broken January to May 2021 bearish Andrews pitchfork, but failing sufficiently to close over either, instead opting to close right on it. Looking below, we still have the previously highlighted widespread and somewhat diaphanous congestion zone between 97.22 and 96.20, with a smaller zone below between 95.23 and 95.40. Key elements of these two are the October 2002 low at 96.85 and the August 22 low at 96.20. Overall, and despite this second consecutive move higher, the market is still following down within the late June to mid-August bearish shift pitchfork in between the middle time below, currently at 96.16, and the upper time above, currently at 99.14. This pitchfork is an offshoot lower from the earlier big old January to May 2021 bearish Andrews pitchfork. Just above the upper time of this newer offshoot bearish shift pitchfork, we have the closely allied declining short-medium moving average, currently at 99.45. And then the nearby 61.8% Fibonacci line, absolute Fibonacci line, at 99.15. And the February to date downtrend, currently at 99.75. So far today, well, at best for the bulls out there, you could call it a stalling motion, and at worst, and best for the bears, this is turning into a possible bearish engulfing pattern today. Cable, aka sterling against the US dollar. Well, yesterday's action can be seen in two ways. It can be seen as an indecisive spinning top that stalled at the testing of the combination of the upper time, currently at 113.52 of the mid-September to early October bearish shift pitchfork, plus the March 2020 low at 114.02 and the October 2016 flash crash low at 114.5, along with the light congestion area from March 2020 between 114.5 and 118. Or it could be seen as a bearish army, if only just, that stalled at that whole load of overhead congestion resistance I'd previously mentioned. Whichever way you look at it, that was what it was on top, capping the market. Below we have nothing much really, until the declining middle time, currently 111.16 of the broken, and remember that's a broken May to July bearish shift pitchfork, and at best that is limited support if at all. So far today, an early attempt higher up to the breach but not broken upper time of the mid-September to early October bearish shift pitchfork. However, that seemingly has not lasted and prices are testing lower. Euro sterling. A second bullish white soldier yesterday and a direct counter to the previous two, that's right, two sessions, possible descending hawk pattern, a two-session possible descending hawk pattern. It's a two-day pattern that's usually seen as bearish. The base of the action was somewhat unsurprisingly one of the highlighted bases of recent action, the rising short-medium moving average, currently 86.42. And the market pushed up through the April 2020 low, 86.69, and the April 2021 high, 87.19, though only closing over the former. Overall, we continue to remain within the same previously mentioned bullish April to August bullish Andrews pitchfork, in between the lower time below and the middle time above, currently at 88.62. So far today, well, an early attempt lower, but not quite making it to the April 2020 low, but instead reverting back up and over the April 2021 high. Interestingly, we have limited resistance on the way topside until the 50% Fibonacci line of the March 20 to March 22 move at 88.51. But it seems right now the market is not inclined to take that on. US dollar against the Indian rupee. An immediate countering bullish piercing line pattern yesterday, counteracting from a low level the previous session's bearish engulfing pattern and key reversal down. This is quite a hesitating action and language following the earlier break below the lower trend line, currently at 82.88, of the recent rudimentary bull channel come ascending wedge pattern. That's currently 82.88 to 83.91. We nevertheless still have some possibilities on the downside of this pattern, assuming of course it is not a false break lower. I have to say what I've been saying now for days, and I continue to have limited confidence in this pattern. It's only because it is just a little too steep for my liking, but also because the market seemed previously and again now hesitant after breaking lower. Nevertheless, it is what it is. So a primary downside, possible downside target X would be in the 81.37 area, but secondary harder to reach target in the 79.17 area. This all comes with a really big pinch of salt, as I've previously stated. Looking below, we have some congestion 81.45 to 81.50 area, but it is of recent manufacture, formed over the turn of September into October. We also have the old broken upper tine, currently at 81.79 of the early June to early August bullish shift pitchfork, emerging from within that congestion. I'm also not too keen on this pitchfork support right now, obviously because it has been broken in the past and will at best be a shadow of itself. Now, so far today, a slightly lower open, but soon it started a further attempt higher, pushing up over recent highs and now over the high of 2 weeks ago and back into that wedge or channel. It's becoming very interesting to see how this is going to develop, because we are already set for this week to be a key reversal, a weekly key reversal. It very much depends where we close on Friday. US dollar against the Brazilian real. A second bearish black crow and a follow-on low to the previous session's immediate countering bearish dark cloud cover pattern. Prices once again punched down through the 50% Fibonacci line at 527.37 of the May 2020 to April 22 move, but failed to really progress lower, coming to a halt just ahead of the 50% Fibonacci line of the March 21 to April 22 move at 522.76. I'm actually not sure if the reason the market halted where it did was purely due to this 50% Fibonacci line. You see, just below and rising up to meet the market is the medium moving average, currently at 521.18. This moving average has some form in the past of acting as a dynamic support. Overall, despite this continued drive lower, the market is still within the late May to late August bullish shift pitchfork, in between the lower time below, currently at 518.30, and the middle time above, currently 550.59. This bullish pitchfork is the current key driver here right now. Now, one other thing of note, and something I've mentioned before, we had a false golden cross, a brass cross if you will, on Friday last week of the medium moving average over the short medium moving average, and that's currently at 519.67. US dollar against the Mexican peso. An immediate countering bullish harami yesterday after the previous session's bearish harami. Just also remember, we had an outside week last week here. Personally, this continues to smack of intraday indecision, contradictory actions on successive days without really going anywhere. Anyway, below we still have the broken upper time, currently at 1992.18 of the March to July bearish Andrews pitchfork, whilst the top was capped once again, once again, by the declining short medium moving average, currently at 20.0395. Now, going back for a moment to this bearish broken Andrews pitchfork, it is mainly redundant, being overtaken by the bearish shift pitchfork for the same move, especially the middle time below, currently at 19.8443. Yet I suspect it may still be significant. You see, the reason I've taken pains to highlight these two tines these last few days is that about a week and a bit's time they will cross over. And for those who know me well, that is when I say look out. Look out for one or more of the following: a change in trend, a reinforcement of an existing trend, and or volatility. These usually lag the crossover by a session or two, but it's worth watching out for what happens on or around the 28th of October. You can see the crossover within the red circle on my daily chart. In the bigger picture, the market has been base building since mid-August, between roughly 1990 and about 2020, with occasional forays outside. This is still the picture, with the current short-term incentive being lower, still being lower. But overall, no significant feature developing in either direction, or at least that is what I normally say. However, I am starting to look at the action since August as a possibly having elements of a rounded bottom, which includes the rising bump from 3 weeks ago, even if it is not such a great looking pattern. Now, so far today, well, nothing much. A move up to test the declining short medium moving average, but limited and looking like an indecisive, I was about to say spinning top, but more like an indecisive doji cross right now. Thank you for listening. The short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.